Welcome back to the deep dive. Last time we covered those crucial steps of setting up your finances for successful investing. Everything from, paying off that high interest debt to automating those contributions.
Yeah, it's like we built the foundation and framed the walls of our financial house.
Exactly. And today we're going to talk about different types of investments and how to choose the ones that align with your goals and your risk tolerance.
So many options, though. Where do we even begin?
For most beginner investors, especially expats, a great place to start is with ETFs.
ETFs, I've heard that term thrown around a lot. But what exactly are they?
So ETF stands for Exchange Traded Fund.
Okay.
Think of it as a basket of different investments, like stocks or bonds all bundled together.
So instead of buying individual stocks, I can buy an ETF that holds shares of many different companies.
Exactly. And this helps diversify your investments and reduces your risk because you're not putting all your eggs in one basket.
That makes sense. Diversification is like spreading my seeds across multiple gardens. If one garden doesn't do so well, I still have others flourishing.
Perfect analogy. Now, there are tons of different ETFs out there, each with its own focus and investment strategy.
Okay, that's what I was worried about. How do we navigate this huge world of ETFs and choose the right ones for our individual needs?
Don't worry, it's not as overwhelming as it might seem. A good place to start is by considering your investment goals and risk tolerance.
Right.
Remember those key elements of your IPS we talked about?
Right, the blueprint.
Yeah.
So let's say I'm a relatively young investor with a longer time horizon and a higher risk tolerance. What type of ETFs might be a good fit for me?
In that case, you might consider ETFs that focus on growth stocks. These are companies that are expected to grow at a faster rate than the overall market.
Growth stocks, like companies in emerging markets or innovative tech sectors.
Exactly. But keep in mind, growth stocks can also be more volatile, meaning their prices can fluctuate more dramatically.
Higher risk, higher potential reward. Got it.
Right.
What about someone who's closer to retirement and looking for more stability in income?
For investors with a lower risk tolerance and a shorter time horizon, bond ETFs might be a good option.
Bonds. They're less risky than stocks, right?
Generally speaking, yes. Bonds are essentially loans you make to governments or corporations. They tend to be less volatile than stocks, but they also typically offer lower returns.
Okay, so bonds for stability and income.
Yeah.
Stocks for growth potential. Got it. Are there any other types of ETFs we should know about?
There are actually ETFs for almost every type of investment you can imagine.
Wow.
Real estate, commodities, even socially responsible investing. There's an ETF out there for almost everyone.
That's amazing.
Yeah.
So how do we actually go about researching and choosing specific ETFs?
Your brokerage account will likely have screening tools that allow you to filter ETFs based on different criteria such as asset class, region, sector, or even investment style.
So I can narrow down my choices based on my specific interests or investment goal.
Exactly. There are also plenty of online resources and financial websites that provide in-depth information and analysis on different ETFs.
Okay, so we've done our research. We've found some ETFs that align with our goals and risk tolerance. We're ready to buy. What happens next?
This is where we get to the mechanics of actually placing an order.
Sounds a bit intimidating. Can you walk us through the process?
Of course. The first step is to log into your brokerage account
Okay.
and find the trading platform. Most platforms will have a trade or buy button
Okay.
that you'll click to start the process.
Okay, and what?
You'll need to enter the ticker symbol for the ETF you want to purchase.
Ticker symbol.
It's a unique code that identifies each ETF on the stock exchange,
Well,
like a shortcut. You can easily find the symbol by searching for the ETF on your brokerage's website or any financial news site.
got it. So I've entered the ticker symbol. What happens next?
You'll see some key information about the ETF pop up, including the current price, bid and ask prices, and any trading fees your brokerage might charge.
Okay, so I've double-checked the information, and I'm ready to hit that buy button. What should I know before I do that?
Hold on, there's one more crucial decision you need to make: the type of order you're going to place.
Order type. You mean there are different ways to buy an ETF?
Exactly. The two most common order types are market orders and limit orders.
Okay, so what's the difference between a market order and a limit order, and which one is better?
A market order tells your broker to buy the ETF at the best price currently available. It's the fastest way to get your order filled. But remember, prices can fluctuate rapidly.
So with a market order, I could end up paying more than I intended if the price jumps up suddenly.
That's right. That's why for most investors, especially beginners, we recommend using a limit order.
Okay, so what's a limit order?
With a limit order, you set a specific price that you're willing to pay. and your order will only be filled if the ETF's price drops to that level or lower. It's like setting a price ceiling
Okay,
to protect yourself from overpaying.
that sounds a lot safer, especially if I'm a little nervous about market fluctuations.
It's all about having control and minimizing risk. And the beauty of a limit order is that you can set it and forget it. You don't need to constantly monitor the market. Your order will just sit there until the price hits your limit, even if it takes days or weeks.
Okay, I'm definitely a fan of limit orders.
Good.
So I've entered the ticker symbol chosen limit as my order type and set my desired price. Anything else I need to consider before hitting that buy button?
Just one more thing. The time in force setting.
Time in force.
This basically tells your broker how long your order should remain active.
What are the options?
The most common options are day and good till canceled. A day order means your order will expire at the end of the trading day if it's not filled. Good till canceled, or GTC, means your order will remain active indefinitely until it's either filled or you manually cancel it.
So if I'm patient and believe the price will eventually drop to my limit, I can just set it to good till canceled and let it ride.
Exactly. It's all about finding the approach that best suits your investing style and risk tolerance. And that's what we've been talking about this whole time, making informed decisions that align with your personal financial goals and comfort level.
All right, so I've got my ticker symbol, number of shares, limit price, and time in force all set. Do I just hit submit and watch the magic happen?
We'll almost always double check everything before submitting your order. Make sure the ticker symbol is correct.
Right.
You've entered the right number of shares, your limit price is reasonable, and the time in force setting is what you intended.
Right. No room for typos when it comes to investing.
Yeah.
So I've hit submit, and my order is sent to the stock exchange. What happens next?
Your broker will try to match your order with a seller at or below your limit price. Once a match is found, the transaction will be executed, and you'll officially be an ETF owner.
This is so exciting. I'm officially an investor.
Congratulations on taking this big step. But remember, investing is a journey, not a destination.
So what happens after we've bought our ETFs? Do we just sit back and relax?
Not quite. There are a few important things to keep in mind once you've started investing. Investing is an ongoing process. It's not a one-time event.
Okay, so what should we be doing after we've bought our ETFs? Do we just check our portfolio every day and hope for the best?
Well, checking your portfolio every day can be a bit like watching paint dry. It can be tempting, but it can also lead to emotional decisions based on short-term market fluctuations.
So if we're not glued to our screens watching every tick of the market, what should we be doing instead?
Staying focused on the long-term game and not getting swept up in the daily market noise.
Right. Stay the course even when things get a little choppy. But what about adjusting our course? How do we know when it's time to make changes to our portfolio?
That's where rebalancing comes in. It's like giving your portfolio a regular tune-up.
Okay, I've heard of rebalancing, but can you explain what it actually means in practice?
Sure. As markets move, the value of your different investments will fluctuate, causing your initial asset allocation to drift off course. Remember that mix of stocks and bonds? Rebalancing is the process of bringing your portfolio back in line with your target allocation.
So let's say my initial allocation was 70% stocks and 30% bonds. But after a year, my stocks have performed really well, and now they make up 80% of my portfolio.
Exactly. In that case, you'd sell some of your stocks and buy more bonds to bring your portfolio back to that 70-30 target.
It's like pruning a garden to keep everything balanced and growing in the right direction.
Now, rebalancing isn't something you need to do every day
Right.
or even every month. Once or twice a year is usually enough.
Okay, that sounds manageable. Any other pearls of wisdom for us expat investors as we continue on our investing journey?
One last thing, don't let the financial news cycle dictate your investment decisions.
Oh, you mean all those sensational headlines designed to make us panic and sell everything?
Exactly. It's important to stay informed, but remember, the financial media often thrives on drama and fear.
Right.
It can distract you from your long-term goals and lead to emotional decisions.
So what's the antidote to this financial news overload?
Remember your plan, trust your strategy, and focus on the things you can control, like your savings rate, your spending habits, and your commitment to lifelong learning about investing.
Great advice. Focus on what we can control, drown out the noise, and stay the course.
Exactly. Investing doesn't have to be complicated. With the right knowledge and approach, it can be a powerful tool for building wealth and achieving your financial goals, no matter where in the world you call home.
Well, there you have it, folks. We've gone from feeling overwhelmed by investing to feeling empowered to take control of our financial future. We've built our financial house, we decorated it to our liking, and now we're watching it grow and appreciate in value over time.
And remember, this is just the beginning. The world of investing is vast and constantly evolving.
That's right. There's always more to learn and explore, and we'll be here with you every step of the way, providing insights, tips, maybe even a few laughs along the way. So if you enjoyed this deep dive, be sure to subscribe to the deep dive so you don't miss our future episodes, where we'll explore even more fascinating topics to help you navigate the world of expat investing. Until next time, happy investing.